Yo guys, today is day 7 and on today's episode we're talking about candlestick confirmation. So we'll be talking about how you can use candlestick to confirm your entries. So instead of entering aggressively and taking unnecessary stop loss, you can start entering with confirmation, and all of these aligns with our system, everything we've been talking about on this series. All right, if you started watching the videos right from the very first episode where we talked about market trends up until now, you would have gotten to understand everything I've been saying, even on a deeper level. Today, candlestick confirmation, and this is a very important topic because this right here is what saves you from unnecessary losses. All right, so from if you're able to understand this topic very deeply, it's going to elevate it's definitely going to change your win rate. All right, so yeah, let's get right into the video. All right, let's get right into the video. I've been trying my best to like upload consistently, and the whole motive about this series was to upload every day for a period of 30 days, but because of my busy schedule, and I've been trying to keep up with uploads on other platforms too, I've not been able to do it consistently. But I promise you guys, from now on, I'm going to try and be consistent with uploading every day. But even if it's not every day, like 2 days gap, because I think the last video was like about 4 days ago, which is not really like how we planned it to be. And some of you must have been waiting for this video, the next video, to like drop since then. All right, so I don't want to kill the morale that we've already had from the start of the series. All right, so let's keep the energy going. I'm seeing you guys reaction, I'm seeing you guys views on the video. Please keep viewing, keep learning, you know let's grow together. All right, and if you're seeing this video for the first time, it's a series we started a few days back and we've been on it. You can start from the very first video and watch and start watching. That way you're going to understand every single thing we've done on this series. All right, and if you're not subscribed to the channel, make sure you hit the subscribe button right now. I'm going to wait for you before we start the class. Go to the subscribe button, hit the subscribe button, and subscribe. It doesn't cost anything. It literally costs $0 to actually subscribe to the channel. All right, it's just a way of supporting the community and also growing the channel, right? So I want to get to a thousand subscribers. We've actually been stuck at 900 subscribers for over 5 months now. All right, and a lot of you have been like viewing my content, which means you know like a good number of you actually likes the content because of the engagement and the reaction, but you're not subscribing. So how can you know when I upload videos? So you gotta subscribe right now and come back to the video. All right, so candlestick confirmation today, and on this particular topic I'm not going to stress about talking about different candlesticks that we'll have, because we'll have a lot of candlesticks. There's actually this book, Candlestick Trading Bible. So if you want to understand more about candlesticks, go get that book, Candlestick Trading Bible. All right, it's going to help you understand candlestick. But for this system, for my strategy, I only pick two out of the whole candlestick that was explained in that book. All right, the bullish and bearish engulfing, and the morning and evening star candle. So these are the two that I use for my confirmation. All right, so let's get right into the video. We've talked about trends, we've talked about market structure, and you already know by now that market moves in three phases. All right, where we'll have an impulse that breaks structure. All right, we'll have an impulse that breaks structure. Then we'll have, after that, we'll have a correction. Then the correction hits a key level and gives us a continuation that takes out this high. All right, now we'll have three phases: the impulse, all right, the correction, and the continuation. And where do we always want to get in? We want to get in here at the reversal level to ride this continuation. We are not interested in the impulse, because that's just an indication that, oh, we are in this particular trend, or we are going this particular direction. Then for the correction, we are not interested in the correction because we don't want to get caught up, because sometimes the correction can be very crazy. It might sometimes put back to discount, sometimes it could just stop anywhere. You don't even know the key level that is going to stop and start reacting from. So you want to wait for correction to come to a particular key level, give you that confirmation, a market structure shift or whatever. Then you start looking for entries to continue the trend, right? So In this video, we'll be talking about how you can get confirmations, right? How you can get confirmations. Now, we've talked about break and retest. That was pretty much what we talked in the last video. And if you watch that video, you should understand trend line and the structure breaks very well, right? So if we have something like this market breaking structure, we have market retest this particular level that have been broken and continues from there. This is basically structure break and retest. But in the case of trend line, we'll have something like this. The market forms a trend, most likely in the correction. Then you can see we're making highs and lows, right? And this is pushing price downwards. You can see the moment we hit here, right? Instead of price to continue this, it made a low that broke this high that have been like protected all this while. We've been protecting this high, is coming down. But at this point, price could not like go any lower. Instead, we hit a major level and we came above it to like break it, all right? And that was where market started reversing. Now, this is actually where it gets interesting because this particular move here forms what we call a trend line, all right? That signifies, that indicates that, oh, if this price is to continue going down, this trend is still intact, all right? So the trend line rule is that we are actually in that particular trend till it gets broken. So the moment it gets broken, this trend does not exist anymore, all right? We'll have to like find a new trend now to go to, all right? So um look at this break, then we'll have the correction that forms the trend line, right? Then we'll broke above it, which actually indicates a shift, right? So which means this downtrend is over. We're looking to shift to an uptrend, right? Now, we have a retest on that trend line and market starts going up. Now, this is not a guarantee that once market breaks a trend line and retest it, it will start going up, all right? Sometimes there's there are times where market does something like this. We'll have that break, then we'll have this where market breaks the trend line and still closes below it, all right, and still continues downwards, all right. There are some cases that happen. It even happened on gold this week. I'm going to show you guys. But how can you avoid cases like this where you don't just have to, bank on hope, where you have an indication, the markets give you that correction, all right, then it stops there. Maybe it's reacting from a key level. Maybe that key level is not strong enough to keep holding price, all right. A market gives you a break. There's what we call false breaks, all right. False breaks are breaks that happens, seems like we've broken out of the trend line, but the candle will always come to close below, all right. The value breaks always close above to show a strong bullish momentum. But you see the fake ones, they will just give you a break. That's why it is better when you use the higher time frame, because the higher time frame are actually going to show you if it's a valid break or not. Because on the lower time frame, it might be a break. You might be seeing a bullish candle and think that is a proper break. But on the higher time frame, you see price closing below that trend line with a wick. So that's to tell you that that is not a valid break. So it's just like market faking out. So to avoid these losses, where we'll have to, like, instead of entering on the retest of the trend line and targeting here, a market does something like this, instead of avoiding losses like this, we use candlestick confirmation, right? So candlestick confirmation is basically us doing here. This is the indication, impulse, then this is a correction, right? Now the correction happens, we hit a key level, then price starts moving this way, right? This is a break, this is the retest, right? Now let's see, this is the trend line, right? I've already taught you guys how to mark trend line from that video. So you can see this is a very good trend line. We'll mark from the start of the trend line, connect the first two highs, then we drag it to to infinity, right? So this is how we drag it. Connect the first two lines that started the trend, because we need two breaks to confirm a trend. So we connect the two lines and just drag till it connects whatever line. We are not going to try to do it this way or this way, trying to make all the lines fit. Just make sure the two first highs are connected, then you just drag, all right. So that is the proper way to draw a trend line. Now that price has actually broken out of this trend line and closed above it, now it's retesting here. This is where our candlestick confirmation comes in. Now on that retest, we are not just going to blindly buy, because most times what I'm just explaining is that market retest here and does something like this and takes us out. And if we are just banking on the retest, putting our entry here and our stop loss somewhere below this protected low, and we are targeting this high, market is just going to do something like that and we'll take loss even when we are right about our system. So that's why we need candlestick confirmation. Now, what is the candlestick confirmation? Candlestick confirmation is waiting for price to retest this particular zone and not just buying immediately. Price retest it, we wait for some certain candles to form. All right, and what are those candles? I've already listed them. So the first one I listed was the bullish, bearish, engulfing candle, and the second is a morning star. Now, if you don't know what those candles look like, I'm going to draw them so you know. So for in this case now, we'll be using a bullish engulfing because that's what we need, the confirmation we need here to buy, because we are looking to buy. So we'll be needing a bullish engulfing. So bullish engulfing is made up of two candles this way, where the first candle is a bearish candle and the second candle is a bullish candle. So you can see that the bullish candle is totally engulfing the bearish candle, right? So logically, this is how the candle prints, right? More like we had a bearish move, a very minor bearish move, then we'll have a very bullish move like this, closing above it. Even on the higher time frame, you can see this like a market structure shift where we broke a high. So this is exactly what this candle is telling us here. Why a very small bearish candle, then a very bullish candle, a Marabozo candle that totally engulfs this candle. You can see this candle is sometimes is as big as this small one. It's twice as big as the small one, which is the bearish candle. So this is the kind of confirmation you need to see right at that retest. Then once you see it, you enter at the next opening of the next candle and put your stop loss. Sometimes you can put it below the candle, but it's always risky because market can always come down to grab liquidity. We're coming to that topic. So it's always you can still put your stop loss at the protected low. So this is just confirmation. So having it confirm gives you your entry, then you put your stop loss at the protected low and you put your target. So you should be more cautious about how much you're going to lose, which is this area, than some people try to make this smaller so that they can have a very high risk to reward ratio that can give them. No, you should be more focused on this side that you're risking, this risk side than the profit side. All right, then you can extend. I've already told you taught you guys how to use FIB 2 to determine take profit 1 and take profit 2 and take profit 1. If here you're targeting this high and it's not up to 1:3, which is maybe your minimum risk to reward ratio, you can target the minus 27.86 FIB level or the minus 61.8 FIB level, right? And that's it. All right, so this is for morning star candle. We also have, for the bearish case scenario on this, we'll have the this is the bullish engulfing. For the bearish case scenario, we'll have the bearish engulfing. So in the bearish engulfing is like opposite of this. We'll have like the bullish candle first, a very small bullish candle, then a very big bearish candle engulfing the bullish candle. And where are you entering? On the open of the next candle, then your stop loss. Where should be your stop loss? At the protected high, because that's where the invalidation zone is. You put your stop loss at the protected high. Then you put your target, you place your targets. You can use the FIB 2 or you target structural highs. Are you getting it now? So yeah, that is it. Now the next one, this is for bullish and bearish engulfing. The next one is morning and evening star candle. So we're going to start with the morning star candle first, which is the pattern for a bullish case scenario. Then after that, we're going to look at the evening star candle. Now this is the morning star candle. It has 3 candles. All right, it comprises of 3 candles, unlike the bullish and bearish engulfing that just has two candles that characterize them. Now for this, we have 3 candles. First is a bearish candle, then we'll have a consolidation candle, like a doji candle, all right, that has a really small body and wicks on both sides. Then after that, we'll have a very bullish candle, right? So I don't know how I'm gonna like customize this, but this is a bearish candle. The first candle, take note, the first candle is a bearish candle. The second candle is a doji candle with wicks on both sides. Then we'll have a bullish candle that closed above any of these. All right. Sometimes the bearish candle can be, still big, but we'll have the bullish candle closing above these two candles. Right. Now for the evening star, we have like a bullish candle. Then we'll have like a doji candle, right, that has wicks on both sides. Then after that, we'll have a very bearish candle that will close below two of these candles, right? You can see this candle is closing below. So this is a bearish candle. It means it closed there. So it's closing below these two candles. For this one, we'll have like a bullish candle. So we'll have the end result is a bullish candle. The end result for this one is a bearish candle. Same like this one. So we'll have is always the bullish candle closing for buys, and for sales is always the bearish candle closing. So get that in your head, right? So you already know the three phases of the market: indication, where we'll have the impulse breaking structure, then we'll have the correction that forms the trend line. All right. So this starts at a key level. This comes at a key level, right? That's where you start getting that reaction. Then we want to see that reaction break the trend line to show us that we are no longer in this trend and market is looking to go bullish, right? Then we wait for a retest. All right. So, but for the sake of confirmation, we're not buying directly at that retest, because we've seen situations where markets we just break a trend line, retest it, and still continue going lower. All right. So to avoid getting unnecessary stop losses, so all we have to do is wait for this any of these confirmation, candlestick confirmation on the retest of that candle. So on the retest, that's where we are looking at this candle. All right, this is for buying, and then for selling, we're looking at this candle and this, right? So for selling, let me give you an example for the selling as well. So on the selling, we have something like this: market breaks structure, which is the impulse, giving us indication that we are bearish. Then we'll have that correction back to discounts, or back to premium rather. So in the case of selling, we'll have premium. So markets creates a trend line. All right. So we confirm it hits a key level. Let's say it hits a key level, tap somewhere here, then breaks the trend line. On the retest of this trend line, we are not going to sell immediately. All right, because market could still continue going up if the price is very, very bullish. All right, because remember, this is a minor bullish trend, so we can decide to continue this trend. All right, so how do we confirm that this market is going to stop here and continue the selling? Through candlestick confirmation. And how do we do? What do? We wait for that breakout to happen. A retest. We don't enter directly on the retest because we are trading with confirmation. We wait for any of these signal to form. Is it that we are waiting for bearish engulfing? All right, is it that we are waiting for bearish engulfing right here, or we are waiting for evening star candle? So any of them that forms right at the point of retest, this is what we are doing. All right. For the sell, we just open our position at the close of that candle, the last bearish candle. Our stop loss, it can be below the candles sometimes, but due to liquidity, to avoid getting stopped out, we can put the our stop loss at the proper invalidation level, which is this protected high. In the case of sales that was formed, all right, we put our stop loss at the swing high, then we target, right? So our target could be structural levels, right? Any of these levels that price created as trend line can be our structural levels. Well, we always target this as TP1. And if you want to target further, you can use the FIB2, right? Where you mark from the swing high to the swing low, right? And it gives you minus this minus 27.87 minus 27.86% FIB level to target as your first target TP1. No, this is your TP1, which is the structural level, the 0% level. This is your CP2. And if you even want to hold it down to CP3, yeah, you can as well hold it down to CP3. Now, let's go to the Richard and look out for some of these examples, all right? Now, this is gold, all right? We've been using gold all through for these examples because I love trading gold, all right? I love trading gold. I've like studied the price action of this particular pair and I just want to get mastery on it, right? I want to get mastery on it. Yeah, it should just load. I think we're having a little bit of network problem, but let's just wait. Let's just wait. All right, so there we have it. So we are going to look at some examples of sales that happened. So we have this sale that happened here, and we have this sale that happened here as well. All right. So we are going to talk about these two sales. So I'm going to, on the higher time frame, we can see this was bearish, this was bullish previously. Then we came here. This was where we turned bearish, right? Because market gave us a market structure shift. So let's see. All right, while price is, we're waiting for price to load there. Let's just look at this recent one, right? So on this recent one, look at what we have. We draw from here, here. So you can see we have a trend line at this point, right? Price, has touched this particular trend line. We started here, see here, here seems like a break. You see why it is always better to wait for the candle close. You can see we came below this trend line and we still went above to close, to close above the trend line. So if you had like entered, if you were rushing to like enter the breakout, you would have been stopped out on this trade. All right. Now on this trend line, this is where we had that proper break. All right. Yeah. So this is where we had a proper break. You can see 1, 2, third test. This was the fourth test. Then this fourth test finally broke the trend line, and this is where we had the correction. So this was like an impulse that broke the trend line, and this is a retest, right? So this is where we had a retest of the trend line. And what do we do instead of entering right at the retest? What do? We wait for price for candlestick confirmation, right? What we're going to do now is look out for candlestick confirmation that aligns with structure. So this is where we retested this trend line, and as you can see from here, we also have this is a structural level that have supported price has actually bought from this particular zone here. So it is possible that if price comes here, we're still going to sell. So all we have to do is to wait for candlestick confirmation to show up right here, and we'll take our position, right? So, and what did price do here? This is on the 1 hour time frame. If you go to the 15 minutes, so we really have to, since we used 1 hour to confirm the structure, we'll have to go to like the 15 minutes to look for the candlestick confirmation. All right, because we want to also have a very good risk to reward ratio. Now look at what happened there. We had this, a bullish candle, then a bearish candle, then you can see this bearish candle, all right, closing above all of these candles. So this is a bearish engulfing. You can see this candle opened there, closed below all of this candle. Now this might not exactly look like the bearish engulfing, but you have to use logic here, right? We'll have, this was its last two bearish candle that formed, all right. Then we'll have these two bearish candles that closed below these two candles, right? So this is the logic behind the bearish engulfing and bullish engulfing. You just have to understand it, right? So this is it here. So with this confirmation, you could have entered right at the open of this candle and putting your stops at the higher low here. So putting your stops here, or this is the higher low here. This is the safest point to put your stop loss. Then you can go back to the 1 hour to target any of these. So you can go back to the 1 hour time frame to target these lows. So these lows become liquidity, this and this. So you can target any of these as your take profit points. Targeting here, you would have seen how many are these, almost 1 to 8, but so would have been easy if you had gotten out here and look for other opportunities, and that will be it, right? You saw how we confirmed that there, and let's look for other examples as well. So this was the first example we wanted to use. So we're going to use this second example, then we call it a wrap. All right, I don't want to make the videos very long, but so the second example, we have like a trend line as well. So this is the one that actually laps, right? or let's see here. Yeah, so we'll have one here, the first touch. All right, we'll have the second touch, and we'll have the third one here, then the one that finally broke the trend line. Right, and you can see how price retested it perfectly. All right, so you can see we are just working with this structure. We have like an impulse, then a correction. The market is giving us a change of character there. This is where we'll have our impulse that broke structure, then a correction, and now we are looking for the change of character, the retest, and the candlestick confirmation, right? So that's basically what we are looking at here. So this was where price retested, and is it retesting any structural points? Yes. So look at this level here. We have this level. This is a key level. We've talked about key level. All right, areas where price has retested several times. We bought price here, price sold here, price sold here, price sold here. So it's possible that price will also sell at this point, but this is also retesting trend line at the same time. So all we have to do is wait for confirmation. This is on the 1 hour time frame. We can go to the 15 minutes so we can get a better confirmation, and a higher risk to reward as well. So we come here and just watch what price is doing. So we'll have this bullish candle. So there was no bearish engulfing here right until this point. So this was where we had our bearish engulfing. You see, after price tested that trend line, we had this bearish, but this wasn't bearish engulfing, because on bearish engulfing, the buy candle has to be very, very small, and the bearish candle has to be at least twice as big or thrice as big as the bullish candle, and that was what we got here. So you can see that bearish engulfing candle confirmation that we got here. So if I had taken this trade, this is where I would have put my entry and my stop loss right at the high of this candle, or the protected high, which is here. All right, because if you're to put it at the high of the candle, the bearish engulfing, it should be here, but this is the right proper invalidation level. Then you can target these levels here. So this first level has already been taken out by the impulse, right? So we'll have here as well to target. So this is also our target points we can target right here. So let's see if our targets, it was actually smashed. All right, so basically this was what we had: an impulse, sorry for that, so we had an impulse that broke structure, a correction to a trend line, then we waited for candlestick confirmation, which is the bearish engulfing, then we sold. All right, so I'm actually looking for price to give us an example. I wanted to give an example with Morningstar, but the video is already very long, but let me just try and see if we can see something on Morningstar candle. Okay. Look at this. We have, this was actually where we have change of character. This is price tapping a key level, right? We'll have this impulse, right? This was where we broke structure. Then we had this correction. Then before this continuation that broke new structure. But if we're following our system, after the impulse that breaks structure, wait for correction, right? That forms the trend line. Now this correction was here, started here, right? We started right at this level, and if I'm to draw this, connect the two lines, draw it. This is the first touch, this is the second touch, this was the third touch before we broke, and now price retested the trend line right at this level. But we are not supposed to enter right at the retest of the trend line. All right, we wait for what? A candlestick confirmation. All right, this was what we had here. Remember, we've had impulse. Market moves in three phases, which is the impulse, this is correction. We are looking for continuation now to write a continuation, right? We're looking for confirmation to write the continuation, and here we've drawn out our trend line. This was where we got the breakout of the trend line. This is the retest. Now all we have to do is wait for candlestick confirmation, which at this point right here is the Morningstar candle. Look at the Morningstar candle that I'm telling you guys, right? we'll have a bearish candle, then a doji candle that has small body and wicks both sides, then a bullish candle that closes above both candles. Are you seeing it now? So if you want to take this position, you enter right at the close of that candle. All right, so you put your stop loss either below the candle, but because of liquidity, I usually put my stop loss below the protected low, because for this structure, this is the protected low, right? This is the protected low. Then I'll target here this high. Now you can see that this high is just 1:2 risk to reward, so I can use my FIB2 to even get, more targets. So I'll put my FIB2 from the swing low to the swing high here, and I might just extend my target to the minus 27.86% FIB level. And if we check that, you're going to see that price was very close before we came back. So if you had said break even on this trade, you would have been stopped at a break even, but this wouldn't have stopped you out. All right, for people that don't set break even, you would have still smashed full target on this trade, just that it would have taken a longer time. Imagine getting very close to TP, returning back to your entry and moving up again. So that's a lot of, emotional ups and downs. All right, so I hope you understand candlestick confirmation, and how it can help you avoid unnecessary losses. All right, so that will be all for this video, and I will see you guys in day 8.